Hey guys, thanks a lot for watching. In this video, I'm going to explain to you the concept of false breaks. And this is something that really catches a lot of retail traders out. And this is actually one of my bread and butters. This is actually one of my actual trading strategies in a sideways market. And I've always said, I'm not actually a huge fan of trending markets. I prefer sideways markets because in a sideways market, the actual ranges are more established. And I just love trading false breaks. You need to first of all understand the psychology of buyers and sellers in a market. So near support, you have people who are buying support to go long and to hopefully sell at resistance. But when they see people that have gone long and it reaches resistance, they take profits and then they open a short position. But when you reach resistance, what happens is that you have people who then have breakout trades as well. So these breakout traders who play true breaks go long. And this complex interplay between the traders who are going long from here and closing short positions and the breakout traders who are going long, this leads to a false break. As you can see, we have this psychological high over here from 1st of December. And whilst we have gone above that in lower time frames, especially the 15-minute, the 1 hour time frame, when you actually go to the 4 hour time frame, you'll actually just see that it's just a wick of emotion. Nothing has actually really changed here. And so, this is how I trade false breaks. I first of all just really zoom out, look at the higher time frames. I then also go to the lower time frames as well. And I see how price reacts. And whilst this is a trend line, and generally for trend lines you need 3 hits. But again, trend lines are subjective, but you can see clearly here, this was a psychological high. But we've gone above. What most people do in shorting especially is that they try to predict the top to short. So they might just get short here, they get stopped out, short again, stop out. I don't bother with any of that. I want to have a really high win rate, so what I'd rather do is wait for price to go above and then come back down. So I'll never catch the top, but my actual win rate will be really, really high, like 70-80%. And so I waited for price to go back down below and see if there's a break in structure. So we had this low 50-minute high. Of course, you have to use your other confluences. I used my other indicators. Someone else might use MACD as well, but I don't really use that much. But when you have an indicator signal from key levels, again, don't take indicator signals into a key level, because that's like taking an indicator signal into a brick wall. But when I saw the change in character, break of structure, along with other bearish momentum indicators, I then entered a short position. And so I entered my short position around here. And I put my stop loss just above the recent local high. And I targeted around here. So I got like a 1 to 3.5 risk reward ratio trade. Again, I didn't catch the bottom, but as long as you catch 70 to 80% of the meat of the move, that's completely fine. Then the next thing you know is that a really similar thing happened later on in the week. And by the way, these false breaks, it's not like I'm saying this retrospectively. I actually spoke about this like 3 times in the Discord channel. I posted in the Discord channel that, okay, guys, I think this is a false break, and it was. And same here as well. I posted in real time. And this case is very similar concept. So in this case, you have this psychological low here, psychological low. You have 2 touch points. And very often market makers like to wick out down below to really grab this liquidity and go up. But this again, you have the complex interplay of people. You have people who are going short here, taking profit here. And you have people going long. And this complex interplay of people often leads to an overshoot. And again, rather than trying to predict the bottom to long, so I'm not going long here. I'm waiting to go in the lower time frames, and I'm looking for a change in character, a change in momentum, and then I'm going long. And so my long position was around here, around this position. So if I get a long tool here, so my long position was around here. I put my stop loss around here because I wanted to be a bit tighter, because it was putting it down here is a bit wide, I'd say. So I put it down here because it's below that low. I'm still holding this position, but it's a hedge long for me, and I might be considering a hedge short up here. But we'll see how this plays out. But it's the same principle, really. It's a complex interplay of buyers and sellers. You need to understand dynamics, and before you put any indicators, just look at the naked price action in a chart. And this false break actually could happen several times. We might go above here, and the same thing can happen. And it's just the idea that we can still go all the way up here and they come back down. A false break, there's different types. There's simple false breaks, there's a much more complex false breaks, and it does take time to master. But the main principle is also this. I've drawn this section here, gray area, because it's better to trade at the extremes of ranges, buying support, sell resistance, short resistance, and take profits as support. If you're in a situation like I was when I longed here, and I longed here as well, and price goes to here, and you don't know what to do, and there's a lot of bearish momentum, just take profits. Because even if price does break out and go up to 18k, you can always wait for price to come back down, and you can buy the support resistance flip and go long again. There's always a trade for another day. And so that's what I actually did in the situation. In the middle of the range, it's a bit more grey area. You can trade in the middle of the range, but it requires a bit more experience. And as I've written here, it's like kind of the equivalent of getting into a dogfight. And so when you just stick to the ranges, it greatly improves the win rate, especially for newer traders. I do trade in the middle of the range, but sometimes I risk often half the amount that I risk when I'm trading the extremes of ranges. But the problem is that most people just cannot sit in their hands. If you notice, this situation, 30th of November, 2nd of December, and here, 7th of December, so you have to wait a bit. Most people cannot wait patiently. They have to be in a trade because of this dopamine addiction fix. And this is why most people find it difficult to be profitable, and they confuse many trades with the actual quality of trades. So trading false breaks is actually one of my favorite trading styles, and it's something that I actually trade a lot, especially in a sideways consolidation market. So guys, I hope this video was helpful. False breaks is not an easy topic, and it's something that takes a while to master, and a lot of people have requested me of this video. But do subscribe to my YouTube channel, which I set up recently. I post a lot of Bitcoin analysis, but also really things to help your trading career, really. Well, thanks a lot, guys, for watching, and I'll catch you in a bit.